Distinguished guests, speakers, ladies and gentlemen, it's my great pleasure to be here in Sinaia, and always a great pleasure to attend conferences organized by FIAR. When going to a place, you normally do a little bit of inquiry of the place you're going, so I found this map that you can see on the picture. It is about the ski resort here in Sinaia, and we know in insurance we all deal with risky activities. Skiing is also risky activity. And speaking about priorities and challenges in the EU insurance framework, this picture depicts it all. In order to get to the top, you have to get some priorities. And you can take different chairlifts. And then away, when going down, skiing, you have to take all the precautionary measures in order to come down safe. And this, of course, has to do with challenges we take in the insurance framework. Regulators must play an active role in ensuring the insurance undertakings have in place the right governance and culture. Among reasons for failures and near misses in insurance are important investment decisions which led to significant losses as a consequence of poor governance. Two most common causes of failures, according to the EIOPA report of failures and near misses in insurance, are linked to internal risks. Firstly, risks that managers and staff lack necessary skills and experience in professional qualities. And secondly, risk of inadequate failure system of corporate governance. The right cultures are rooted in strong ethical frameworks and importance of individuals making these decisions in relation to principles that we have been talking about today, rather than only business-oriented values. How to achieve better regulation? We have to introduce procedures that look more deeply into certain aspects of insurance corporate governance, even when the insurer has a positive financial situation. We have to trigger additional review when there is a diversity of opinions also within the supervisor. How we can achieve balanced regulation? The primary objective of regulation of insurance market in Slovenia, Romania, and all member states is to protect the consumer. For this reason, uniform legislation in the forum of Solvency II and IDD was prepared at the EU level to ensure equal treatment of all entities within the EU single market. Solvency II primarily focuses on health or capital adequacy of insurance companies. IDD is focused on regulation of sales and risky products offered by the insurance companies. The combination of both should ensure that the insurance market remains financially strong and shock resistant and offers adequate protections to insured. What are current regulatory challenges? Cross-border operations of insurance business, due to the nature of the EU single market and insurance subjects were able and still are able to conduct business in all member states without restrictions, with assumption of appropriate notification. Up to now, the regulation was focused mostly on activities in local market and works based on home principle. Michael was already explaining something about this principle. And due to these changes and the significant increase of cross-border business in the EU single market, the regulator must also deal with characteristics of other markets in order that member states properly supervise their own and home insurance subject markets. This brings with it the need for well-defined and ongoing cooperation will probably need to be developed further and strengthened in order to achieve adequate consumer protection. Then change on capital markets. In view for the gate of stock market growth and at the same time the low interest environment, it's now only the matter of time when there will be a change of financial markets. And that is why insurance companies are quite exposed to shocks in capital markets, which is why the regulators monitor capital adequacy and financial stability and strength with stress tests done at the EIOPA level. This year, a stress test is performed for EIOPA insurance companies, IROP, and last year it was done for major insurance groups. Nevertheless, the possibility of long-term lasting low interest rates within the EU environment remains, which only increases this risk. EIOPA 2020 Solvency II review, it is a regular review of adequacy of the SCR and other relevant components. And normally, it is typically performed every 2 years, and important part of 2020 will be, beside the SCR, review also adequacy of third pillar reporting. And current regulatory changes. The main objective is to ensure the level playing field so that all insurance subjects on the market are subject to the same rules, and that in the financial sector there are no concentrations of unwanted risk of exposures. At the same time, we would like to promote market development, since only well-developed and well-functioning insurance market can offer an adequate protection to policyholders. At the same time, we are constantly questioning how much regulation is enough or too much. There definitely should be equilibrium, not to put too much burden to insurance industry as well, but to get to the goal. And these reflections, they're always somehow waiting in the context of a review, which is also the case of the Solvency 2020 review. Looking across the Atlantic, there is a moment, a strong desire to deregulate financial market and lowering capital requirements. At the same time, we also know that Solvency II is a regime which measures risk based on market consistent approach, and therefore shows that the actual insurance sector is. Any reduction of these requirements would mean that we are resigning from actual market value of risk. Additionally, it is also true that if financial regulation in different parts of the world is very different, this could cause new systemic risks that would also cause inflow of so-called hot money to areas with low regulation. This would, due to the investment diversification in financial market, have an impact on the whole financial sector. I will not talk so much about the application of the proportionality principle. We know that it is a fundamental principle of union law and also a key element of the Solvency II regulation. And here, this regime, the principle of proportionality appears in two levels. And we have to keep in mind that general principle has more detailed application also in delegated act, but there is still a lot of room to use this principle. In EU, there is a strong tension to the supervisory convergence, but at the same time, each supervisory authority uses proportionality in different manner. This is because of different interpretation, lack of experience, different environment, different expectations of undertakings, and so on. So, undertakings should have in place an effective system of governance, which provides also for sound and prudent management of the business. The 4 key functions, as required under the Solvency II requirement, are an essential part of the system of governance. For smaller undertakings, it is sometimes burdensome to have all these 4 key functions. That's why undertakings may combine also key functions in one holder, and this is about taking proportionality in practice. Wholly key functions should generally not be combined with board member, but these combinations can occur also in exceptional cases. Combination of holding key function with operational tasks should also be avoided because of their controlling objective. The same time, undertakings that use simplification should report to the supervisor where they use simplification calculation, and they should be disclosed in the regulatory supervisory report. About some more ideas, proportionality is an idea and principle seems fair, and with honest use there should not be unfair or misleading results. But supervisors should know why undertaking can use simplified calculation or simplified governance structure, and their undertaking must prove and justify the use of simplified method. Supervisors have more possibilities to prepare internal rules or to publish their own expectations via guidelines, or even to discuss internally case by case. Then we come back to the initial questions, where prescribed principle might no longer be principle. Speaking about IDD distribution rules, Slovenia implemented IDD in February this year. And before that, we came out with consumer guide because we think that financially educated consumers is one of our priority tasks as well. And at the same time, the IDD evaluation is done by EIOPA. And even after 3 years, we, member states, friends, we do not have a clear-cut answers. We interpret same rules differently. We have different understanding, just same as on the picture. You can see different species of fish living in the environment. They are very different, but they have to adapt and live in the same community. And so the show goes on. About general good provisions, there are so-called additional rules within or inside IDD rules. There are provisions which are part of the legal system of the host member state. And the basic principle underlying general good rules in the insurance sector is that insurance undertakings or intermediaries operating under the Solvency II or IDD are obliged to adopt these activities in their host member states' arrangements. But here comes the issue. You can see about different interpretation. This is just the cause of matters in the EU framework. About cross-border business, this picture represents the main elements that are important for a regulator cross-border insurance business. I dare to claim that consumers do not always understand to what kind of risk they are exposed when conducting this risk of insurance. Markets perform based on home host principle, which means that in case of a dispute, the consumer must exercise his right in the country where the policy was concluded and not with the home regulator. At the moment, there are many open questions concerned to monitoring mechanisms and resolution mechanisms. Main challenge for regulators in single EU market is to find appropriate ways to cooperate in order to maintain an undisturbed single market, special consumer rights protection, and to eliminate mutual frictions and playing the playing game in case of troubles. Part of this is being also solved in SFES review procedure, which is quite a long process. And at the same time, the regulators are dealing with these questions at the EIOPA meetings. What about dealing with climate change, which is a very hot topic on every conference? Regulator can react to climate change risk by ensuring adequate capitalization of insurance companies on this area. Besides this, a regulator can also cooperate with other national authorities that prepare national climate, natural disaster risk assessments and prepare relevant measures in relation to this. Furthermore, in the EU, we are currently coordinating. Our activities go into the direction of getting requirements for green investments. And regulators can also perform stress tests targeting resistance to natural disasters, and not only for shock and capital and financial markets. In the last part of my presentation, I will just shortly touch the new business models Everybody in this room, I suppose, has heard about Lemonade. That was founded in New York City some 4 years ago. It operates as public benefit corporation, using a similar model to mutual insurer. They give back all funds not used for operations and claims to a charity that is selected by the policyholder at the beginning of the policy term. And this is called Lemonade Give Back, and it just totaled more than 106,000 in 2018, according to the company website. The use of modern technology has to focus mainly on the needs of the urban dwellers. They use also a modern approach of selling insurance and to paying claims. Claims are filed entirely through the application, and 25% of claims are paid within 3 seconds. This is where digitalization is going. In 75% of cases where it cannot be paid right away, it is handed off to the company's claims team, which may be the first time an actual person become involved in the policy. So this is where the insurance is going. Last year, in November, Lemonade announced they're coming to Europe. This is first major market outside of the US, and AZN-Allianz are investors in Lemonade. In Germany, for example, already operates an insurance company called One Insurance, but we should be aware that Lemonade prepared $300 million deal to fuel its artificial intelligence-powered insurance platforms to global expansion. Even if we know that Lemonade in the US and Europe are totally different things, as regulators, we should be prepared on a big Lemonade coming to our market. I will just give you a best practice example in Slovenia. There are new ways of claim assessment. In one Slovenian insurance company, they use so-called PhotoCube, which is a high-quality photo studio. And just less than in 5 minutes, they can scan your car and prepare a claim assessment without an actual person becomes involved in claim settlement process. So here is where insurance is going. According to Elon Musk, the electric car maker's full self-driving feature will be completed by the end of 2019, this year. And by the end of 2020, it will be so capable you'll be able to snooze in the driver's seat while it takes you from one part to another part of the city. And full autonomous cars will make the roads even safer, because sophisticated cars, as we know, they do better in detecting trouble than human eyes and ears. Besides that, computers never get drunk, they don't check mobile phones or fall asleep at the wheel. Determining, however, who is at fault when something goes wrong could get phony in this new world. The rules and regulations of the road should follow this new trend. Now the liability sits with the driver, and this has to change. We need to shift the liability from the driver to the vehicle. And will we transfer the liability further from the manufacturer? Will there still be a place for liability insurance? These are all these open questions that need to be answered. And I'm coming to the last slide. This is a little bit of promotion for our insurance supervision agency. Last year, we organized a conference, Insurance in a Digital World. We concluded the conference with a panel discussion where we tried to answer the questions, where do we go from here? And while looking at into this year's topic, we decided it will be back to basics. And this conference will be held on 6th of September in Ljubljana, and it will address the challenges that have been part of the insurance business from the very beginning, also focusing to underwriting risk. With these words, I would cordially invite you to our conference in September, and I wish you a pleasant stay in Sinaia and fruitful.